Hey, what's up guys? This is Sunny from FX Sharks. This is a beginner video understanding Forex. This is complete beginner stuff. So if you know about, brokerages and, platforms and, you should probably move on. So let's get right into it. Trading platforms, each market, futures, stocks, ETFs, Forex, each one of them has their trading platforms where you can access the market from. Okay, so one example is MetaTrader 4. This is the most commonly used Forex platform. Lots of community behind it that supports it. Lots of coders. Just a lot going on for MetaTrader 4. And then we have Thinkorswim by TD Ameritrade. This is more of a all-in-one type of solution, a trading platform. You can trade options, you can trade futures, stocks, ETFs, everything from this platform. But the only catch is, it's for you have to have an account with TD Ameritrade. Moving on, choosing a brokerage. Okay, a lot of people have a lot of questions about this. For me, it truly just boils down to ECN, STP versus a market maker. Let me break down what ECN, STP, and market maker is. ECN is electronic communication networks. Okay, so basically what it is, it's computers basically connecting you directly to the market. Okay, so there's no middleman here. It's just you place your order and it goes through the great internet, the great web, and then your order gets placed. STP stands for straight through processing, which is almost the same thing. Your order goes straight through and just processed on in the market live. Market maker, on the other hand, they basically are middlemen. Okay, you place an order, they take your order, and then they will process it for you. Okay, but the only catch is they might manipulate the price a little bit, just a little bit, and they have a dealing desk and books, and they keep track of accounts. And market maker, for me, I personally do not dabble into signing up with market makers. I do have experience, however. Usually they have really good incentives to join a market maker. Sometimes it's a good leverage, sometimes it's fixed spreads. um, but the bad thing about market makers is that obviously they can manipulate the price a little bit. ECN, STP, you might not get those benefits like fixed spreads and high leverage, but you get straight through processing, very manipulation going on, very little. Um, I personally use Oanda as my brokerage, and also you want to make sure that if you are in the United States, there are certain brokerages where they're all offshore, and technically you're not supposed to use them, but you can still use them. It'll just be a little harder to report on your tax returns, and you just have to be careful about the tax stuff when you're using overseas brokerages. So moving on, we have demo versus live trading. If you're getting into this industry, you will hear this a lot. Are you a demo trader or are you a live trader? What this means is demo is fake money. They might call it paper trading too. Basically, you have, say $1 million, and it's all just fake money, just monopoly money. And, you're just messing around trying to see, how you can play the markets, and, that's just what demo is. Live trading, on the other hand, is when you have real money in the markets. You're actually playing the markets real time with real money, and you're making or losing real money. So those are two terminologies you should probably look out for. Moving on. So last thing I want to talk about is what makes the market move. Like, truly, for a beginner, it's very important that you understand this right from the start. What makes a market move? It's not just computer blips, going up and down, or your indicator telling you, or an indicator moving the market. No, there's a lot of groups out there telling you some stuff in which we particularly disagree with and is actually false. Indicators do not move the markets. It's buying and selling. That's simply what it comes down to. Buying and selling. How many buyers are there and how many sellers are there? If there's more sellers than buyers, then the price will drop. If there are more buyers than sellers, then the price goes up. For example, let's do a simple example. Say that an iPhone was worth very cheap. It's worth like $10. You know, an iPhone 7, and you'd be willing to pay for it. $10. You'd be like, yes, I want this. Someone comes in, they're like, no, I'll pay 11, and you're like, no, 12, and then the 13, 14, 15, and it keeps going on and on and on. The price is going up, 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 because there's demand. People want to buy it. They see that it's undervalued. So there's a lot more buyers. Okay, there's a lot of buyers, in fact. And then once it starts reaching to the price of like normal iPhones, like say it's 700, um, that's when the buyers start to drop off, and the price starts to stall, and it doesn't move anywhere. It's like, okay, 600, 700, and then like everyone's like, oh, this is just another normal price iPhone, and then a lot of buyers leave. And say what happens is, um, there's not enough buyers, but let's say some people bought it cheap, and now that they see that the price is at 700, they want to sell it for a profit, right? So they want to sell, but there's not enough buyers. No one wants to exchange $700 for an iPhone. So what do sellers have to do? There's more if you know there's more sellers now than buyers. The sellers have to drop their price in order to incentivize a buyer to buy it. Okay? So 700, no one's biting. Okay? There's a lot of people trying to sell their iPhone at 700 because they want to make a profit. But there's no one biting it. So you have to drop the price to 650. And then a few people might buy it, but not many. So the rest of the sellers, they keep dropping the price until buyers come in. And that's basically what moves the market. It's supply and demand. Is basically what it comes down to. So this is a very beginner type of video. If you just are super fresh to the Forex industry, this is the video for you. Hopefully this helps you clear some things up. If not, be sure to send us an email at info@fx-sharks.com. We will get back to you within 24 hours. We will answer all your questions. And we just want to help out. So see you guys on the next one.